Good morning, everybody. It's Chris here from Serene Education with the 4 Majors Notice Update for the 24th of July 2012. Hi guys, hope you're having a fantastic day this morning. Beautiful day here in Wales, fantastic across the country I presume, and hope let's make the most of it. Don't get to see the good weather as it is at the moment quite often. But getting on to the pairs, let's have a look and see what's been happening on the 4 Majors. Okay. Been away, haven't done any recording recently, primarily because Nikki and I have had students staying with us and doing doing our courses, and they've left yesterday, so we have another one that's going to be joining us soon, which is fantastic to see, all the way from Zimbabwe. So it'll be good to see Kazadi soon on the chat. So let's have a look at the euro. What's been happening in the week? What did we have last week? Well, last week we saw a very bearish close to the week after a lot of momentum to the downside, and that momentum pretty much peaking or pulling back over the past couple of weeks to the underside of a price support and resistance here that we saw in January of this year. Price pulling back over a full month and then finding exhaustion, a massive down candle which cancelled out all this pullback, and then we've seen price falling lower. So where to is this likely to go to? Well, we know that's the ultimate one over here that we're looking for is the low here, roughly around the 1200 mark. I've gone for 1200, nice round number, but you can see it. The wick actually goes down towards the 1900 mark. But I've gone for the bodies primarily because the bodies are pretty much on par with each other, and they come on around roughly around the 1200 mark. So you can see price really moving into that area now and slowing down as we head into this very major support and resistance that we've seen last May, June of 2010. If I can back up even further than that, you can quite clearly see that we have had there are a lot of consolidation touches in and around this area. So that is going to be a major support and resistance level, our next potential target. But you can see going forward, we have seen price moving lower than that towards the 1900 mark, and preferably down here towards the 1700 mark. There's also some movement. But we've seen that price has moved all the way down to just under the 1100 mark, roughly around the 109. So there's still a lot of movement for this, and it gets lower. So I mean, this is going back to 2003. For goodness sake, it's crazy. But you can see that ultimately the overall picture is very, very negative for euro. News out across the board. That's making the circles out there on the fundamental side is that Spain is in a dire situation. It looks like most of their provinces are broke, and it's inevitable we could be seeing them looking for those bailout, calling for bailout funding quite soon. All these little loans have been getting. I've always said along the way that they haven't been pretty much loans. I think they're more of a bailout, to be honest with you. They've just called it loans just to make it sound a bit pretty, to scare off all the people, the speculators. But things aren't looking good, and apparently yesterday they've actually stopped, or Spain has stopped any short selling in its markets to stop this negativity actually playing through. Dow Jones yesterday I think closed down 200 pips. So everybody knows this momentum is starting to generally start to move now as we see another economy going through a crisis. Just had Greece, now we have Spain. And there's always that talk in the background that also Italy is also in a dire situation. So the boats, you know, this tall building is seriously starting to move sideways. It's toppling now, and it's getting worse. So if the charts are telling us negative, look for more sentiment to the downside. And you can quite clearly see on our CTC, the weekly, things are really looking bad. We are looking at that 1200 as a definite potential target area for the foreseeable future, at least for this week. And everything's telling us we should be looking for selling. We go to the daily. Let's have a look and see what's happened. Yesterday, a bit of a indecision day. We had price moving lower, however, closing to the upside of that candle, still below that major breakdown candle. A nice bearish engulfing after almost a full week of indecision. A lot of spinning tops at the underside, as I mentioned, of that 12,300 mark. That is that price support and resistance support here, then a breakout, then the consolidation at the underside, now resistance over here, and price is now falling. So moving away from a prior support area, forming a new resistance and a lower swing, and all the moving averages in play and the CTC very much in favor of further selling, shorting opportunities, and you can quite clearly see this morning in the Asian session, slightly to the upside, testing yesterday's highs, but finding more reasons to be at the bottom end of the candle, as that sentiment is still genuinely looking for further sells. So intraday, start looking for those downsides, moves, look for opportunities to the downside. This is the 4-hour chart. You can quite clearly see here on the 4-hour we had a bit of a bounce at the 1208. Nice bullish engulfing here. However, still not able to break above that major support and resistance level here at 12,300, which is still above price. You can see a lot of hesitation at that area. That happened to be a previous support and resistance level. And you can see as long as we maintain below that level, and also price fails to actually break above the prior support here, just above the 12,1600 mark, then ultimately we're going to see a pullback, a consolidation, and then a reattempt of those lows. Another move to the downside again. Now our CTC still tells us that the sentiment is still looking negative, and most importantly, our moving average is confirming that the sentiment intraday is still looking fair, or still looking for that downside momentum to play out. So all looking good. For further sentiment to the downside, 4-hour candles pretty much indecisive the past 12 hours or so. So on the hourly chart, notice the RSI is still below the 50% line, telling us that the sentiment is still negative. Institution moving average above price, CTC strategy is in play. The only thing we don't have at the moment now is a red arrow confirming that the sentiment is genuinely negative, but you can quite clearly see that on the hourly chart at 1400 we clearly have a resistance. Okay, over a number of full day of resistance at this level, and as long as this resistance level intraday is still in play and the 50% line is above, moving average is in play, we could see potential for further downside and a reattempt of those lows where we just come from. So 1207 would be a good start, and then we should be looking for those lower lows to the downside once we've got to that. So look for a nice little arrow here, red arrow, to confirm that the sentiment is looking down, because you can see a lot of indecision through the Asian session in particular. We've seen a slight pullback. However, that pullback has been very indecisive, still not closing above a price support and resistance on our hourly chart. So we do need to see this area here at 1400 being broken to see any further upside movement. Until then, sentiment is negative, daily selling is negative, wow, hourly, 30 minutes, everything's looking negative. We should be looking for negative sentiment. Looking for trades to the downside, no buying sentiment at the moment. Moving on to sterling, let's have a look at the week. Very bearish indeed. Quite clearly you can see on this particular chart, our weekly chart, you can see there's hesitation roughly around the 15,700 mark. Loads of resistance over here. Candles moving into this area, but clearly not moving any higher. Over the past couple months, you can quite clearly see price has been heading into it, finding resistance and moving back. Heading back into it, more resistance, and falling back. The institution moving average, all the moving averages above price, acting as a clear ceiling level, very, very strong ceiling level for this pair at this area here at 15,700. And as long as that maintains, then obviously we're going to see price moving to the downside. Our daily, you can quite clearly see that institution moving average also there quite clearly on the 15,700. So you need to make a note of that, guys. Okay, always make a note of your major support and resistance levels. They will dictate price action intraday or your trading setups for the weeks or the days, etc. It's so important. 15,300 we know is a major support and resistance level below us, because this area here in particular has been targeted over a number of months. If I can zoom out, you can see here on my daily 2010, right from 2010 to currently, we have had support at this level, and when we've reached this level, we've had a bounce. Reached the level recently in June, we've had a nice little bounce to the upside, but trapped by the 15,700, which is the institution moving average above us. You can see quite clearly as we head into this just recently. 2 days ago we found resistance, and sure enough we had a bearish engulfing candle at a resistance level, and sure enough yesterday we saw the momentum favoring to the downside, falling quite sharply to the downside because of that. And on the Asian session last night you can see a slight pullback. However, the momentum is quite generally strong, so we have a very short pullback, and the candle sentiment is looking dire as we see price hugging the bottom end of that candle. The CTC on the other side is telling us this pullback over here is still bearish consolidator. As long as we're still trading at the underside of an institution moving average, then the ultimate sentiment is still looking negative. Okay, it's just a pullback. The overall sentiment on this pair, you can see we come from higher highs, is still looking negative. Okay, you can see quite clearly the bigger pattern here. If I zoom right out, you can see that we're looking very, very dire at the moment. So intraday, we should be looking for price to target the downside. We have an upside swing here, swing higher, swing high. We could see price moving towards this 1545 area, particularly. We could see price moving towards it because of this upside trend. We had a little bounce over here, bullish engulfing. So anything around here, we could see a potential support being found before we see a continuation to the downside. But as it stands now, if anything, look for targets to the downside. Roughly the 15,400 is a great target. Look for entries to the downside on your smaller time frames. So you can see on a 4 hour, for example, the institution above price, CTC in our favor, red, 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 red. Everyone's looking fantastic. So we've got to look at 1545 as potentially a support and resist, an area of that could really be of benefit to us. So if we take a fib retracement level from a high here back in early May before we saw the selling to the downside, you can quite clearly see that there is a 23.6 mark at the 15,500 mark. Okay, below that there's a lot of emptiness, So you can see price on a 4 hour trying to find a reason to try and hug onto this, or to try and stay above this area here at 15,100. Price moves lower with a bearish engulfing candle below the 15,51, and then ultimately we're going to see price forwarding lower. The CTC tells us that we should be looking for further shorting opportunities. So if you're looking for a trade, look for a break and close below 1549, and then we should be targeting that 15,400 mark as price moves lower. And if I take the low over here, example, looking around this area here to see if there might be a correction, 1545, a nice break lower, then the correction, and then the continuation in the direction of the overall trend, which is negative. Onto the US dollar Swiss franc weekly. Let's have a look. You can see price, as I mentioned last week, our overall target would be the 1000 mark, as this is a clear direction for this pair, and you can see quite clearly why we're going to the 1.00 here, the 1 mark, primarily because we have support and resistance at this level over a number of months or years in particular. You can see the CTC very much telling us we should see upside movement, and sure enough, you are clearly seeing that. As we head into this area, however, you can see that the candles, this week's candle is quite stunted because of that. Move to the daily, you can quite clearly see why. And there we go, there's that 1000 mark for this pair. There we go. Let me just make sure everybody can see it. CTC very much telling us in favor of upside movement. Yes, we've had some pullbacks, but the overall sentiment is still generally being to the upside. And sure enough, as we've headed higher and broken major support and resistance levels along the way, prices managed to pull back and find support and build on that. Clearly here, the last one trading above the 9700 mark, moving to the downside, consolidating over a full week, and then the bullish engulfing candle that came through on Friday, moving higher than the prior resistance level here at 985, and now clearly looking for that upside movement on the last stretch towards that 1000. But as we head into that, yes, so you can quite clearly see we've seen price pulling back to the downside, finishing below the 50% line of this candle, but still higher than the previous day. It's most important. You can see this morning on the Asian session, very small trading range. Let's see if we do see another kick to the upside, but be aware if you are in this trade, guys, to start consolidating or moving your stops up to capitalize on it. Otherwise, we could see potentially for price to pull back before we see a reattempt of this psychological area here as the target for the foreseeable future. Last pair of the day is the US dollar Japanese yen. Let's have a look at this pair on the weekly. Well, you can quite clearly see that 80 recently being a major sticking point for this pair in terms of resistance. I'm just going to make it nice and dark. Just make this figure right. There we go. You can see quite clearly over a number of months, especially through 2010, September, October, November, leading up into 2011, through 2011 starts all the way to June, July of 2011. You can see major support over here, and then we had a breakout through July, and then price pretty much consolidated roughly around the 76 mark for a number of months heading into 2012, and then we had that bounce, that beautiful bounce after some favorable unemployment non-farm figures. We saw the US employment figures really rising, but however, since the break of 80, price coming out stuck at the 8400 mark, which happened to be another previous support and resistance level to the upside, and since then price has pretty much fallen over, hasn't made any higher highs. It retackled that 80 mark and since then broken lower and now spending more time below it and eventually pretty much giving up the ghost and price forwarding to the downside. It is now tackling the 7800 mark, which happens to be that intraday, not the intraday, but that prior consolidative resistance level between the 80 and the 76. Quite clearly, you can see through here August, September, October, November, December, January, February. At 78 over here, clearly there's an area of support and resistance here, and price is now heading into that. We have had a psychological, we have seen a test of it over yesterday in particular. You can see here quite clearly price testing it. There we go, which happened to be that the top end of that support area at 78, quite clearly where price has been to before, and that is the 78.6 retracement level. So if I draw my fib retracements here from the low that we saw in February all the way up to the mid-March, you can see 61.8, and then if I put in the 78.6 mark, another fib, you can quite clearly see price is headed into that area there. Okay, so psychological bounce. I had a pullback yesterday. However, you can see the momentum is still generally favoring further downside movement for this pair. You can see quite a sharp move to the downside. That intermediate trend line very much a very strong down move. CTC is telling us we should be looking for nothing more than shorting opportunities. Everything's in play on this template, which is fantastic. So as you can see on the Asian market this morning, still falling lower. Candle, very little decision. A lot of us just been selling this morning on the Asian session, and ultimate target should be that 78 mark and back down towards the 7700 if you see that 78 being broken. So intraday, look for that sentiment to look for those lows at 7800 there. There we go. This is our 4-hour chart. Clearly see that price pulling back, failed to actually break above that price support and resistance level here on our 78, roughly around the 78.50 mark, consolidating, and then over the past 12 hours we've seen price moving lower to the downside, and then the 4-hour candle that's in play now, which will be closing at 10 o'clock this morning GMT, you can see is hugging the bottom end of that candle. So on our hourly, have a look and see if that sentiment is generally negative. Yep, being capped by the 50 period moving average. Institutional moving average still above price, and you can see those lower swings on the pattern. Price really gaining momentum, swinging lower by this little breakout here, fake out, which failed to actually break above the prior resistance level here, and in doing so moving lower once again. But you can see the RSI spending more time below 50% line, telling us that the sentiment is still negative, genuine negative for this pair. We've had a pullback over yesterday, however that's failed to really gain any strength, as it's failed to break above a price support and resistance level here on our intraday charts at the 78.50 mark. In doing so, consolidating and moving lower. As long as it spends or stays below the 78.50, then ultimately we should be seeing price reverting and reattempting those lows at 78 before we see the 7700 below us being the second target. That's it, guys. That's it for today. I hope you have a fantastic trading day. Enjoy the weather. If you aren't trading and you can have some time out in the sun, I do suggest you go out and get it. As we all know here in the UK, we've had quite a soggy summer, so make the most of it. If you are any trades, just have a look and see if there's any news out there that's going to factor price action. There's a lot of news today on the European markets. I've seen German flash manufacturing goods. We just had the French flash service PMI results that come out positive. Next up, we have German flash manufacturing PMI results. European flash service PMI. Then this afternoon we have Fed Chairman Bernanke speaking. So be aware of that, because when he speaks, everybody listens, and there's a lot of speculation when he talks. So be aware of it, guys. Other than that, have a fantastic trading day. Please follow the rules of the strategy, or the rules that you've in place. Back it up with sound money management. Most importantly, just keep it as simple as possible, guys. Okay, the chart will tell you exactly what it is that's going to be happening. All you have to do is just be patient enough just to wait for those candlesticks to form and look for those signals, guys. There's always going to be a signal on the chart telling you what sentiment was. The psychological sentiment is on the chart, and if you can actually figure out what it is, then it's just going to add another egg to our basket. Okay. Other than that, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.